Would GDP ticking higher and inflation slowing put the U.S. into quad 1?
It looks like if you look at our GIP model right now, if you go to slide 5, it's kind of nothingness really, but and I understand that we want to be surgical about nothingness because even though we're operating in a very small area of, in terms of the surgery, what this does here, it drips close to it. It's an interesting question. Don't forget that this dot right here, this is where we are right here, okay? It's still in, hovering, right? You're like, it's kind of like, this is the point when you start, but then it goes whammo over here. This is what the market's basically having a lot of schizophrenic kind of action between, are we going to stay here or are we going to go here? Well, here, this is the quad 2. You're definitely not going to be there, okay? Quad 2 is where you have inflation going up. So inflation's going down, so you're either going to be here or you're going to be here. You could kind of sneak over into that corner there for a bit, but the whole point is that the market's been pricing this in for 2 years, okay? It's not like 2 minutes ago when they saw the retail sales number that they're going to price in, that forever. So you want to be careful when where we're mapping on the quadrants is starting to confuse people in this zone. The biggest calls to make is when you zoom over here, or like we did when we went all the way over here. That's when we went ripshit bullish on the U.S. stock market. This is apologies for using that naughty word, but that right here, anybody who followed us in man, that's just such a downer, not getting the right color. Look at that. See that? Big difference between that and over here. This one's gonna get some more red. I've doodled on this one, okay? Look at the difference. These are the extremes. This is where you should be getting wicked, I said rip shit bullish, okay? Q416. I don't think I've been more bullish since we've had the firm, that's for sure, nor have I stayed that bullish, okay? Now we're starting to get cautious because we've gone from here to here. That's the US. In the world, we're down in here, both way down there, okay? So again, we did the right thing. I'm happy with the capital that's still in my account because it continues to go up. I don't have drawdowns in my account. It's just how much capital can you make? That's always the thing. If you can nail every single move, I mean, you're going to be Bernie Madoff, okay? But for now, the probability is we do something like this, and then what you're really setting up for is this over here. And that's going to be, we could be there for 2 quarters in a row. So again, stay tuned on that. I love the questions. Thanks for asking them that way. Be careful with all the subtleties if you're trying to be super surgical about it. Since most of you are as they'd say in Massachusetts, wicked smart, you're going to ask those questions, as you should. Everybody here is asking the right questions, but what you do with the market call can be a little bit more obvious than what it is doing, what the predictive tracking algo is doing every single minute of every single day. That's why we're actually quite reticent in issuing updates to the data point, to the daily thing, because it can draw people in to all the different mental issues that we have as human beings to missing the bigger picture, all right? I'm not saying that anything else that I've not said. Again, we have not been a short seller of tech. I said I wanted to, but thank God I didn't. We have a lot of clients who wanted to, and they did, and they lost a lot of money doing that. So the #1 goal in macro is don't lose money so that you can keep the money that you have and compound it, and that's how we're gonna think about it as we continue to go forward, because that's the way we've always thought about it.